Say make money, money, make money, money, money.
Make money, money, make money, money, money.
G'day guys, Sid here from LJ Hooker Colts Sinclair. I've got a very special guest here today. Say hi to Karl Hofman. Karl Hofman is from an organisation by the name of Beanstalk Group, the Beanstalk Group. And what they do, they help people realise their dreams. At the moment, we're seeing investors sort of trickle out of the market. What I've seen personally is a lot of owner-occupiers. But I think today we want to talk about getting back into the investor market. And there are a number of ways of doing it. And Karl's a perfect guy to help us along that way. Karl, g'day, mate. Good to see you again.
Yes, thank you, Sid. Very nice to be here.
Fantastic. So I've done some work with Karl in the past, and he's helped me personally and a lot of my clients. But I thought it'd be a great time to have him on here and just discuss certain things. So some of the things we can talk about, Karl, would be obviously the benefits of having a investment property. And also maybe you can just speak on, what are the benefits of having one inside your super managed fund, self-managed super fund, and outside your self-managed super fund. Because I think a lot of people are missing an opportunity here. We all know the stock market's not going too crash hot at the moment. So I thought maybe you can allude on that and just help us out. That'd be great.
Yeah, really good. Thank you, Sid, and thank you for the invitation. Look, and just before we start, if I could just have a small disclaimer, in fact, about what we're going to discuss. So everything that we talk about is general information. So we're not giving specific financial advice to anybody. And if anybody was, in fact, wanting to uptake any of the strategies that we discuss, we would recommend that they seek independent financial advice from the appropriate industry expert. So if you just take this as general advice, then we've met our statutory obligations. There we go.
Perfect.
So notwithstanding that, thank you. So property as an investment generally is an okay idea, particularly good stock standard residential stuff over the long term. It's provided good stable returns for most people. And that's what the general topic is today. But more specifically, owning the property inside a super fund as opposed to outside. And as Sid mentioned, or as you mentioned, Sid, most particularly a self-managed super fund. So we're talking about getting your money out of, sadly, what is probably a dud super fund, which so many Australians are unfortunately in, into a self-managed super fund where you've got control over your money and control over your future. So if you want to buy a property using your super, you have to have a self-managed super fund. So that's the first step in the process. There are some significant advantages with owning the property inside your super as opposed to outside. One of those advantages is ultimately tax, and it relates to capital gains tax, which on the good news is you do get capital gains. The bad news, outside of super, you typically have to pay tax on it. However, if you buy it within a self-managed super fund, after you reach retirement age, any capital gains are tax-free. So I can see that.
Recap that, right? So if somebody was to buy a property in their self-managed super fund and hit retirement age, there is no capital gains.
No capital gains on the investment. Oh, it's really good. It's a huge advantage. And not only on the capital gains, but if you decided to continue ownership of the property, there's no tax on the rental income. So you have tax-free income from the rent that you'd be gaining. So that's a significant difference from owning it outside of a self-managed super fund.
Now we're particularly going to focus on residential today, but is that similar with commercial properties too?
Yes, absolutely it is. It's exactly the same scenario. So for any commercial owners, it works exactly the same. So that's really good. And even there are, we'll get to that perhaps on the next session, but there are also other tax advantages from a commercial perspective. But so really, it's a long-term journey, and so typically outside the super, it's a standalone investment. But what we talk about inside super is in comparison to leaving your money inside a super fund. So if you have, say, $180,000 or $200,000 in your super fund, what would that look like after 20 years? Where would you be at, as opposed to owning a rental investment? And comparatively speaking, the rental investment will provide you, on average, double the returns that leaving your money in the standard super fund would. So the returns are spectacular in comparison. So, and I think Yeah, it's a very good opportunity to maximise the money that you have in respect of that.
What about the borrowing arrangements? Okay, so a lot of my clients will say, well, how much money do I need to get into the market? I mean, do I need millions of dollars in my super, or do I need hundreds of thousands of dollars in my superannuation fund? Where can people start? I mean, how much can they get in with?
Oh, really good question. In fact, that's probably the most pertinent question indeed, Sid. So in practical terms, there's no statutory requirement or minimum amount you need to convert to a self-managed super fund. So, you know, you can do it with a nominal sum. Practically speaking, to purchase an investment property, around 120,000 would probably be a minimum. So any balance above that, then it's achievable. Typically speaking, we would look to see to remain maybe 10% of the property purchase in cash in the super fund, just as a strategy. So from around 120,000, you would have buying power of about 450,000. Within that, the borrowing is quite straightforward. So there's part of your question whereby for a residential property, a 20% deposit is required, and then normal lending requirements from there. So once you've got 20%, which, so, you know, for the sake of my maths, $100,000 by way of a deposit, you can get something for around 450, 500,000. So you don't need to have $500,000 in your super to get onto the property ladder.
So, okay, so people take out a loan as they normally would?
Yes, correct. Yep.
That's right. And they pay off the mortgage over 30 years or whatever might that look like?
Yes.
Now, I think that's very achievable. I've got a lot of mums and dads that would probably have a lot more than $120,000 in their superannuation currently, right? They've been working for 30 plus years, both of them.
Yes. So the advantage there, obviously, the more you can contribute towards the property purchase, the less borrowings you'll have, and subsequently the shorter term of the mortgage. The other really significant benefit of buying the property within your super is that obviously with any rental investment, the rent will go towards paying off the mortgage and ultimately the ownership of the property. But the other significant benefit is that your current superannuation contributions can also be used to pay down the mortgage.
Right,
and
so it even cover the shortfall in rent if need be?
Yes. So you'll be very familiar with this term, so some of your viewers may not, which is a negatively geared property. Which so outside of super, if there's a shortfall, if your mortgage is, for the sake of my maths, $500 a week and you're only getting $400 a week rent, the owner of the property, you're $100 out of pocket each week. If you buy that same property inside the super, you're already making contributions from your superannuation that can now offset that shortfall and pay down the mortgage even quicker. So there's no out-of-pocket expenses if initially the property is negatively geared. And I can just give you a rudimentary example where we had an example of a client just purchased a property for $450,000, taking into account the weekly rental. He was on $85,000 a year, so he made his weekly contributions of $163. That was his current superannuation contributions. Took the mortgage from 30 years down to 22 years. So that's awesome. That's the power of having the property within inside your super and being able to apply your superannuation contributions to paying down your mortgage. And so you might be able to tell me.
Yeah, sorry, go.
And then we look at had he left his deposit was 120,000. That's all he had to contribute to the purchase. If he'd left that in his original super fund for the 22 years, and if we take an average return of 5%, after 22 years compounding interest, he'd have a bit under $700,000 cash in his super had he left it there. If we compare what he's going to end up with now owning the property, he purchased it at $450,000. And so you might be able to advise Sydney property prices, they double about how often? Do you know, is it about, people say every 10 years? Is that reliable?
I can, again, general and advice, you know, but over the last 3 decades, what we've seen here in Western Sydney particularly is houses have doubled in price. So something that was $250 has gone up to 500, and then from 500 almost to $1 million at the moment. So yeah, that's what we're seeing.
So in this gentleman's case, so he bought a property at 450, it'll likely double, you know, approximately to 900,000. So by the time 22 years is up, it would have doubled again. So around 1.8 million So even if we
Sure.
pull that back to 1.5 million, just there or thereabouts.
Yep.
So he owns the property. In 22 years' time, he'll have a freehold property worth 1.5 million and the ongoing rental income. If he had left the same amount of money in the super fund, he'd have a bit under 700,000. So the comparison is he's $1 million better off by owning a rental. Yeah, by owning a rental property. It's right. And he would have paid tax on his rent on his interest income had he left it there as well. So it's a very good strategy.
Yeah, it is a great strategy. I mean, I'm self-employed. Every time I pay my super, I'm always thinking, oh, I wish I can use that money for something, right? Like pay something down, pay a mortgage down, or whatever it might be. So it's a good scenario. What I wanted to talk to you about was, let's just say somebody says, I'm fed up with my current superannuation setup and whatnot. How hard is it to set up a SMFS, a self-managed super fund, and what's involved?
Thank you, because that's a very pertinent question as well. So it's a very simple process, and we at Beanstalk will facilitate the entire process. It's a very simple application to fill out. Typically, the self-managed super fund is set up by way of a company structure. So everything's organised for the client. You don't need to leave the comfort of your home. Just authorise a few documents. The company structure is set up. The trust is set up, which the self-managed super fund sits within. We would also organise a bank account. We would then organise the rollover of your existing superannuation into your bank account, which only the client has access to, by the way. So it's a very, very simple, straightforward process. That whole process takes about 2 to 3 weeks from woe to go. So it's a very short time frame. And then once we call it self-managed, you don't have to manage it by yourself. I think that's really important to note as well. So we have a lot of I see a smile on your face because a lot of people think, now what do I do? Well, we have the industry experts to sit alongside you on a daily basis to help you, guide you through either property investment and any other subsequent investments that you may decide on.
Right. Okay. So, I mean, we've sold a few properties through your avenues to some of your clients, and they're very happy at the moment. But I wanted to recap on an important point. So as a current private landlord or an investor, I buy a property for $500,000 and I sell it in 10 years' time for $1 million. Give or take, let's say 49% capital gains. Would you agree?
Yes, absolutely. Yes, sadly.
Okay. But let's just say I'm 50, I'm 55, and I buy a property and I make $100,000 in terms of income on the property. So profit, I pay zero capital gains.
Zero capital gains once you get into retirement. And it's not quite as good, but not bad along the way. If you've owned it for more than 1 year, you'll only pay 10% capital gains tax. So it's still even attractive. The profits would have to sit inside your super fund, but you can't
use the profits.
No, you can't. You can't take them out for personal spending. So if you buy the property inside your super fund, any profit would, but still you're paying a much lesser tax rate than what it would be outside. So if you wanted to sell it for various reasons, you wanted to capitalise your profit and buy another property or buy other investments, you most certainly can, and you're not particularly penalised for the gains. It's still at 10%.
Bit of a no-brainer.
It really is. It's the government have done a great thing to make and you'll have a lot of clients that are perhaps sadly stuck on the rent track. That they're living in a rental property and have got maybe 200 grand in their super and they can't save a deposit for a home. So this is an ideal opportunity to get onto the property ladder, owning the property within.
But it needs to be an investment property, right?
Yes, thank you, Sid. Yes, thank you for raising that point. So it does need to be an investment property. As a residential property, as the owner, the super fund, you're not allowed to live in it. So it has to be a genuine rental investment rented to a non-related party, but it gets you on the property ladder. And you're getting to leverage the full equity of the property, not just the nominal sum you have in your super. That's the benefit over time.
That's great. That's great. Now, how long do you think the process will take somebody?
Well, if it means look from start to finish, it's about 2 weeks, thereabouts.
2 weeks.
Yeah, so it's a relatively short process.
Yeah,
and then what we would do clearly with your expertise. So the other question we get asked is what can I buy and where can I buy it? Well, we would, if you don't mind me saying, Sid, you're the expert to talk to about that. So you can buy any property anywhere. You can even
Yes.
buy it outside of Australia if that was appropriate. So you
Yes.
don't have to buy your property within Australia. Most of the time
Yeah.
you would, of course. So it's a rental investment, and you would typically look for, good returns that, Sid, you're clearly adept at providing that information to your clients as to the best investment strategy specifically for the property.
Great. So some of the questions that I had come in through the week, as our landlords knew that we were going to talk to you today, Karl, was what about the current interest rates and which banks are lending on self-managed super fund homes and mortgages? So
yes, so there's
at the moment.
Thank you. So there's a limited panel. This self-managed super fund lending is a little bit specialist, but we would facilitate all of that on an individual basis through our lending arrangements. So interest rates are typically just slightly higher than what a standard residential would be, just a couple of points above that. But Sid, with all interest rates over time, they will come and go.
Yes.
So, it's just market rates at the moment. And without being too contrite about it, it's not quite so critical within an investment property where you've got your superannuation contributing to paying down the mortgage, because you have some sort of buffer there.
Yeah.
So, and generally once, through your good advice, getting the clients into the right investment property where there are, good gains to be had, then the rental income will largely take care of any interest rate rises.
Can you refinance a property within the self-managed super fund to tap into the equity?
So, look, unfortunately, no, you can't. Very good question again, and very pertinent indeed. Look, that's one of the scenarios that you can't do. That's not allowed within the super. But what you can do is, over time, once the equity has increased, if you wanted to take advantage of another opportunity, is to sell the property.
At 10%?
And you'll pay 10% capital gains after a year, then reinvest that money into another deal inside your super again. So it's still possible to take advantage of it. You can own as many properties as you like within your super fund. There's no limit. So over time, once you build up capital or sufficient for another deposit, or if you had monies coming from outside, then you're able to buy two properties. And so just on that, if I might mention that sometimes, in fact, not sometimes, a lot of the time, you're able to combine a number of parties, in fact, up to 6 people, typically family members within a super fund. So one party might only have perhaps $150,000 in their super, one of the mums or dads, whereas if you combine both, you might have 300,000 and perhaps the children. So collectively, if you pool all of your money within inside your super, you have much greater buying power in respect of rather than just one person. So that's a very good strategy looking at the family super. Up to 6 family members can combine.
Okay. If the husband and wife buy a property together, is that classified as 2 super funds?
No, it's not. It would be under the one fund. Yeah, so it's kind of your own mini superannuation fund, basically.
Yeah.
So you have a self-managed super fund with up to 6 members.
Okay, that's really good. Karl, this has been really good to talk to you about it today.
Yes, thank you.
So what we've learned today, it's a good strategy, great way for tax evasion, if that makes sense. Like by the time, if you're ready to cash in at retirement age, great way not paying capital gains on your properties, which is fantastic. We all hate paying tax. I think it's no one's favorite outcome. If there was one good piece of advice you can tell people right now to get geared up and get in contact with you, how would they be able to do that? And what do you recommend they do?
Well, look, in the first instance, if they can just reach out to Beanstalk, and we'll provide the respective contact details for that. And we would then just have a discussion around their personal circumstances in terms of how much super they currently have and what would be the best strategy to adopt in respect of moving forward with that, and then subsequently refer them back to you to find them the right property.
Fantastic. What's the best phone number people can get you on?
Look, if you can mobile in the first instance, if I can give that to you, which would be 0414 913 002, and we'll bring that up on the screen shortly.
And your website?
And the website is www.Beanstalk Group. I won't spell that out, but you'll get it, beanstalkgroup.com.au. So either one of those, or of course they can contact you, Sid, in the first instance, and they can you can refer your clients on.
Be more than happy to. Karl, I wanted to thank you very much for your time today. It's been really good to chat.
Yeah, it's been a pleasure. So look, we'll go on the journey together to get people in a much better place.
Absolutely. Well done, mate. Thank you.
Thank you for your time.
Ciao.